Welcome back. Let's have a look at Tesla stock. So today 6.4% down, closed at around that $1,000 support that we have been watching. And as we expected last time when I made a video about here, it was Wednesday, I was expecting to Elon sell some shares, but apparently he didn't sell there. He sold right here on Thursday another 1 billion worth of shares. At this point, I think he sold 10 plus billion shares worth of shares. And on Friday, right from the open, straight down. And of course, overall market came down as well. But what to watch from here, all right? And how you can protect yourself with these kind of movements when market becomes volatile. Well, learn to trade options and don't be biased to the long side or short side. Well, when market becomes volatile, it represents like it moves from one extreme to another, and it presents you great opportunity to capitalize on both ways, and also at the same time protect your long-term positions. You don't have to sell them, but you can play these short-term options when you realize that, hey, I have too much to lose. Let's say you are into Tesla with okay, you have 10 shares, right? And it worth around somewhere here. It was worth around $11,050, right? And it drops to $1,000. Well, at that point, your position is down 10%. You lost $1,500. But with short terms, like last time I showed you guys one trade that I did, of course, I didn't write it as much, but here's the contract. So $10,050 put was purchased by me somewhere here on Wednesday for $248. Sold it for $600. Let's say you thought, okay, you can drop a little bit, but you didn't think that it would drop to 1,000, and you held it from $250 all the way till here, $20, which would make it $2,000. So if you put like $250 out of 10,000, what is it? It's like 2%, 2.5%. I don't know. You could put a little bit of money to protect your position when market becomes volatile. So let's say your position dropped from 12,000. From 12,000 to 10,000, you are down 2,000, but your $250 protection insurance brings you $2,000, and you are flat, and you don't care about that stock being down 10%, or you sell it somewhere here at 40 and you even make money. Your account is positive, even your position is down. So that's the whole point. I mean, I don't want to take it too long, but let's jump into the Tesla, but you get the idea. Learn how to hedge your positions so you don't care what market does at any given time, and at the same time you preserve your long-term shares. So Tesla at this point, so if this stock slips below $1,000, I think it's gonna be down more than 20%. So at this point, from 1243, if it comes to that like $990 levels, that would be the 20% mark, which is typical correction zone. And if it does slip below that 50-day moving average, which is 980 at the moment, this is a 50-day simple moving average, then I do think that stock can easily go to 900, towards $900, which is the breakout of this last year's all-time highs. All right. So also, if we're gonna see next week some sort of a bounce, relief bounce, I expect it to happen here at 50-day. And how much of a bounce you can expect from Tesla? Well, we have covered it as well. If you have been watching this channel for quite some time, you know that I use average true range for any given day when I trade a stock. Let's say, look at the Tesla's average true range, right? Average true range for Tesla, $61.62. All right, that's how much it can move up or down. You can expect it to move up or down from open to close. And look at how much it's down today. So if you knew that Tesla could move $60 any given day and you traded it today, well, you knew when to cover it, when to short it, when to get out. it moved $69.63. So use that. So if this stock hits these support levels, so my point is, well, I can expect this stock to pop around like $50-$60. So, and that's what it has been doing for the past 12 days. And my average true range setting is set to 12 days of average price movement, just for more of an accurate action what's going on lately. So, and there were times it was trading with less of an average true range because it was not moving as much every single day. But here on top, it's been volatile and it's been moving very big. So, and that's why average true range is higher. So, and at the moment, stock is still $1 trillion, but if it slips below 1,000, well, it will go back down. And also to the upside, right? So the resistance now becomes this 10,060. All right, that was the support. And also this red line on top, let me remove all these lines so you don't get confused here. So this is the resistance trend line we are watching for a possible breakout. If it does bounce here, that's what you wanted to get above. So if you are bullish, if you think that the stock is heading to 2 trillion, 4 trillion, 5 trillion, it needs to get above this line. All right. So also MACD is still to the downside, momentum is still to the downside, so there's no indication at the moment that trend is changing. And also you can use 5-day moving average. So if you look at this chart right here, blue line right here is a 5-day simple moving average. So close below 2 days, and you knew yesterday it was a short, today it was a short, so you can take advantage of this as well. So for me to go long Tesla, well, it needs to get above that moving average at least. All right. Also option activity, well, today 1.3 million shares traded, puts, and 1 million calls. So, and also another thing, we're not going to look at individual names, so many contracts. I have usually a hard time telling what people are doing. Usually premium selling, a lot of time decay guys pretty much trying to take advantage of the time, and IV, implied volatility. So implied volatility spiked 82% right now, and by December 31st, implying $190 move up or down. So that's the video for Tesla. Hope you guys liked it. I will see you in the next one. Peace.